to this PC. So I'll record. Thank you very much for reminding me on that. This session is going to be recorded. So everyone is ready to listen to how this business works, okay? Everyone is eager to know, how are we making money? That's the first point that everyone goes to. But as I said, we need to first understand the basics. How does it work? Huh? In order for you to understand Inkryptus, you have to understand the technology. Let me write that down. The technology, knowledge that gives Inkryptus existence. We have to first understand the technology that gives Inkryptus existence. And this technology is coined the name blockchain. Now, you might be wondering, why is it important for me to understand the blockchain? I don't care about the blockchain. I want to know how I make money through Inkryptus. Well, in order for you to understand how we make money through Inkryptus, we first have to understand how Inkryptus works. And for us to understand how Inkryptus works, then we have to understand how the blockchain works, because blockchain is what brought about the fundamental pillars of where we can build Inkryptus from. Now, what is a blockchain? In simple terms, a blockchain is, let's put it this way, data storing, okay, technology, knowledge, which in one word we can say it's a ledger. It's a ledger, okay? Blockchain is a data storing technology. So it's basically a ledger, but that stores data in a distributed manner. Distributed, transparent, and immutable ways. Okay? So the only thing that separates the blockchain, we'll speak of it broadly so that we can go straight to the point, is that it's a ledger. The only thing that a blockchain does is store information. That's it. Blockchain stores information. That's the only thing a blockchain does. But unlike any other data storing technologies, the blockchain can store data in a distributed manner, meaning that the data is not stored on one central server. Not one central server. In a transparent manner, meaning that everything that is done in a blockchain is visible. Anyone on earth can see it, and in an immutable way, meaning that it cannot be altered once it has been stored. So with the blockchain, okay, what we can do now, more than other systems, what we can do is to store data, okay? Store data, okay? First point is the distributed manner is mean in a synchronized set of computers, of computers. A synchronized set of computers. These computers are commonly known as nodes, okay? So we can have in one blockchain, one specific blockchain, let's say the Bitcoin blockchain is stored in more than 1 million computers. which are all synchronized into one system. Okay? The data is also transparent. You can see everything. Everything. Another thing is that the data, once stored data can't be altered. Okay? And there's another very important point is that I'm going to say it in a simple term. The data is owned by users. Now, I'm not going to go very deep, but basically what I want you to grasp is the concept of that in a blockchain allows data to be stored in a unique way, where it can be stored in many computers at once. Any person, anyone can access those data. Even if you wake up today, you say, okay, I want to see the first Bitcoin transaction. You can see that. You just wake up. But if you go to other systems, maybe mobile money or banks, you can say, what was your first transaction? They'll be like, okay, let us dig. It's going to be a process. So that's the whole concept of blockchain. Now, in order to power these blockchains, today I'm going to give you a new approach. In order to power the blockchain, we need crypto. In order to power the blockchain, we need crypto. Okay? So I just want you to carry it like that, because blockchain has so many applications. Blockchain can be applied to art, to insurance, that's called NFTs. Blockchain can be applied to supply chains. You track the whole process. Blockchain can be applied to communication, to entertainment. It's called metaverse. Blockchain can be applied in any aspect of life. Any aspect of life, because what? Blockchain is just a way of storing information. That's how it is, okay? There are some practical or technical limitations to the level of how it can be applied, but technically you can still apply it, although there are some constraints. But in order for you to interact with anything within the blockchain ecosystem, then you need cryptocurrencies. That's why you hear the word cryptocurrencies being thrown here and there and there and there. Why? Because you need crypto when you are interacting within the blockchain. Are we together to that point? Please, if we are together to that point, let's go to the box chat and type 444 if we are together to that point. Okay, I'll move on. So, okay, we are together with Julie, with Charles, with Diana. Okay, it's good to know that people are catching up. Now, you might wonder, like, why is crypto used? Why is crypto needed within a blockchain? As long as a blockchain is public, as long as the blockchain is public, then it needs cryptocurrencies. Because we need crypto. Crypto. Why do we need crypto? Crypto uses, okay? Crypto can be used first and foremost as the fuel for paying fees, right? Transaction fees. Let me put it like that. For paying transaction fees. When you want to move crypto, you pay transaction fees. When you want to create an NFT, you pay transaction fees. And this is usually paid with what? With crypto. Another use of cryptocurrencies is project ownership. Project ownership. Meaning that behind every cryptocurrency, most cryptocurrencies, there is usually a project, okay? Now, when you buy the coin or the crypto of that project, it means you're also buying project Ownership because you own a part of the project. That's the whole idea. Okay? You own a part of the project. That's what we mean by crypto ownership. So the crypto is always used when we are interacting with blockchains. Now, there's something that you have to keep in mind. In terms of classification, we have crypto that are currencies. This is very important. Currencies, which is like USDT, DAI, USDC. These are always equal to $1, always, at any specific time. All of these currencies are equal to $1. These are currencies because if I have $1,000 today, I can swap to get USDT, and if I send them anywhere on Earth, they will get the same amount of dollars. That's easier compared to if you are dealing with the second class, which are now the crypto assets. Assets. These assets are like Bitcoin, Ethereum, the ink of Inkryptus wallet. These are assets. They fluctuate in price. These ones now, you can mostly use them for what? Within the specific project, within the specific ecosystem. You treat them as digital assets. So if you want to do your transactions, maybe you want to pay someone, you want to do this, it's best to use cryptos that are currencies because of their stability in price. And crypto that are assets, you use them for a specific purpose. Is there any question to that point before I move any further? Is there any question to that point? Any question? Any question to that point? Okay, there's no question. I'll move further. Now, when we are speaking of cryptocurrencies, there's one thing that, or the direction which we take is usually we approach cryptocurrencies as assets. Assets. Very important for you to get this point. Crypto as assets. Meaning that people buy land, people buy gold, people build houses which they rent, people buy bonds, people buy shares because they are assets. They believe that when given a long period of time, they usually increase in value. They can hedge themselves against inflation. Crypto now is a new class of assets that are built on a blockchain. That's the only thing that you have. Crypto is a new class of assets built on a blockchain. And when you think in that mentality, then when you are buying any asset, we have to use logical reasoning. When you're buying any asset, we have to use logical reasoning. And that is something that is going to set you apart from 90% of investors. 90% of investors. Just investing, becoming logical when you want to invest in crypto, just like how you'll want to invest logically in other assets. Now, let me hear from you. I want to hear from you. For example, you want to invest in land. Let me use the land example because I'm more comfortable with land because at least I understand land, okay? You want to invest in land. Can someone go to the box chat and tell me, what are the things that you will look into? Maybe you want to buy land to develop some apartments. What would you look into? Please go to your box chart and type and start telling me. You want to invest in land. You have your money, you want to invest in land. Then what do you look into? Let me see some response. Okay, we have one, accessibility. Okay, that's one. Accessibility. Okay, we have another one, access to social services. That's another point. Access to social services. Let me see another one. We have location. Yeah, location is very broad. Like, what do you look in when you are saying the location? Like, location is very big. Okay, we have the size. Okay, we have the size, size and price. Okay, we have ROI, we have the price again, we have the roads, which is like social services. So basically, what we are seeing here, what you all have proved is that there are some things that you have to look into when you want to buy land. So you can't just be like, hello, yes, I have maybe 100 square meters here I'm selling. Yeah, you send me 50 million, I'll give you the title. You don't know where the land is. You don't know what you can develop on that. You don't know anything about the land, and you just give them 50 million and you move on. That's not possible. Now, I want you, okay? I want you to have the same mentality, and let's move on to crypto. You have to have the same mentality. Now we are coming to crypto. You want to invest in cryptocurrencies, okay? Now, I will personally help you with some of that. If you want to invest in cryptocurrency, remember, I said earlier, crypto gives you ownership of a project. It's more like a share, okay? It's more like a share. Let's look it as a project share, a blockchain project share. Okay, blockchain project share, right? So let's look at crypto in a new perspective. Crypto as a blockchain project share. So the first thing and the obvious thing is going to be looking at the project, right? The first thing is that we are going to be looking at the project. And in the project, we only have to look at very few things. And it's going to be very simple for you. Every project has something called a white paper. Let me write that down. A white paper. And when you read that white paper, you have to see the following. You have to see a problem. You have to see a solution. A solution. You have to see one of the most unlooked at factor is the utility of the coin slash token to the project, to the solution. So when you read that, you get that white paper. You read, you see what problem have the project founders seen. What is the problem? As long as I have this saying, as long as there is no problem, there's no solution. So if there is a non-existent problem, then we don't have a project. No problem, no project. A crypto without project is like writing on water or writing on the beach sand. It's all, eventually it's going to be there temporarily. Once the waves come in, they move out, we have no more writings. So no problem, no project. No project, don't invest. If you want to invest in a cryptocurrency without a project, I'll leave my number there. Please send me that money. I have more use for it. There is no point of you investing in a cryptocurrency that has no project behind it. That's the first thing. So meme coins, it's not a sustainable investment. Yes, you can make money, but it's not sustainable. The word sustainable has to ring words in your ears. We want to invest in projects that make sense in the long run. You give yourself 10 years in a project, that's when you're going to see real money. So in the white paper, we look at the problem. What is the problem? Now, after the problem, we look at what is the solution that is offered. Because there are some solutions that, they don't make sense. And the third and most important thing is, what is the role of the coin that, the coin within the solution? Or how is the coin now being used in the project? Once you've done that, you can know how you position yourself. You can understand, yes, this coin is not used in 1, 2, 3 scenarios, but the scenario that they're proposing to use it might be sustainable in the long run. And since I'm investing in the long run, then obviously I want to reap the benefits. That's how it is. Like, the company is going to make profits. How are the profits going to affect the coin? Everything about that is written in the white paper. Everything. You go to Bitcoin, you'll see it. Ethereum, you'll see it. BNB, you'll see it. Inkryptus, you'll see it. Every good project has a problem that they have seen within the community. And they have seen that our solution is best. And within that solution, you can use this coin as part of that solution. Are we together to that point, ladies and gentlemen? If we are together, please go to your box chat and type 555 if we are together. If we are together, go to the box chat and type 555. Okay, we are together. Namara, yes, okay. People are good. Now, the second thing is now the social, no, let's go to the economics. The economics. The economics, okay, no problem, Charles. When we are speaking of the economics, it's also written in the white paper. Yeah? The white paper has every information that you'll need on any specific project. It tells everything, even including the roadmap for some contexts. But the white paper is what introduces the project. Within the white paper, you will see the problem statement, the solution, how is the coin used. And now in the white paper, you'll also see the economics part. Here we are looking at the supply and demand dynamics of the coin now. Okay? The supply and demand dynamics of the coin. Now, please, I want you to listen very carefully. Very carefully. In cryptocurrencies, and in most cases, the only thing that is programmable, that can be included in the white paper is how the coin is supplied. Or I can say, is the supply dynamics. That is the only thing that can be programmed within the white paper, within the blockchain, the supply. The demand aspect is controlled by how good the project is. How are people engaging in the project? We're going to see the third point of you looking to investing in crypto. So the economics, preferably called as tokenomics. Let me write tokenomics, it's easier. Tokenomics, okay. Tokenomics, yeah. Tokenomics, now in the tokenomics part, we only look at the supply. That's it. How is the supply structured? Like we'll look at factors like maximum supply. Is there any burning? Burning. We look at burning. We look at minting. How are coins coming into circulation? So that aspect is basically economics. But one thing is to notice is that even within the economics part, we still have the demand part. The demand part, this is the social part, which is going to be driven by the project and the third thing. How do I put it? The engagement. Now the engagement, engagement, let's say engagement dynamics, because there's just not one word for that. But in the engagement dynamics, we look at why will people buy the coin? Okay, why buy the coin? Now, buying the coin in the social aspect, not the project aspect as the problem solution, no, but the social aspects. Because here we can have speculators speculating. Oh, Jesus. Okay. Let me move here. Let me do this. Okay. So just a minute. Let me finish it. So we can have speculating. People are just speculating. They want to buy low, sell high. We can have investors, right? And any good project, the team has to make sure that they create more investors than speculators. More investors than speculators. Once you have more investors, people who are believing in the long term, people who are investing in the long term, then your project is eventually going to be good because you're going to have people not just selling their tokens when it goes low. People are going to be willing to buy when your coin is down, meaning buying the dip. So these three factors and many more, which of course are there, should be your main gauge. So you look at the project, you look at the tokenomics, you think like, how are the engagement dynamics? You consider the team, you consider the roadmap of the project. So let me add them here. So you can also consider the team, how they build the project, how the project is built. For example, Inkryptus is built on educating people. Inkryptus is built on educating people because why? We want more investors than speculators. That's the whole idea. We want more investors, so we have to make people investors. And the only way you can make anyone invest peacefully is giving them knowledge, just like what we are doing right now. That's the only way. So the team, we also look at the roadmap. Like, what is the project roadmap? What is the project trying to achieve? Because the roadmap is very essential. Back in 2021, there were three projects that were basically doing the same thing. We had PancakeSwap, we had BuySwap, we had BananaSwap. And today, the only coin that I can at least say I can put my money in is PancakeSwap. Why? Because of the roadmap. They adopted to where the market was going. The team did not forsake the project. So they're like, okay, we need to shift from A to B because A had been working before, but it's not working as we expected it to work, so we have to move to B. That's where the roadmap comes in. So the vision of the team, how they build the community, how they build the project is also very important. When it falls down to the roadmap, is the roadmap achievable? Is it executed? We are seeing Ethereum projecting new things that they want to achieve. That's the whole idea. If we are together to that point, ladies and gentlemen, please go to your box chat and type 111. No, not 111. We are trying, go to 666. If we are together to that point, please, ladies and gentlemen, go to your box chat and type 666. Okay. Okay. Now we're getting to the best part now. As I said before, blockchain is just an infrastructure for building. Blockchain is an infrastructure for building. But when you build financial systems in a blockchain, we have what we call decentralized finance, DeFi, decentralized finance, okay? When we build financial systems within the blockchain, we have decentralized finance. Now, the problem is these services, for anyone to access them, it's complicated. I have personally lost like a good sum of money investing in decentralized finance. Not because it was bad, no, because there are some things that I was supposed to do, I did not do. And I ended up losing money. So, seeing this problem, seeing the problem, Inkryptus was born. That problem, accessing DeFi is hard. Solution? Let's create a platform. Let's create a simple interface platform. Simple. Let me put UI. Let's create a simple user platform where anyone can just come in, invest in decentralized finance, and enjoy without being exposed to the risk. So Inkryptus has created a platform where investing is no longer hard. You just click buttons. You don't have to deal with smart contracts. You don't even need to know how to read them. You just need to know how to click buttons, how to read numbers. That's it. So when we are looking at Inkryptus, we are looking at a platform that aimed at simplifying investment in decentralized finance. And what was the point of anyone investing in decentralized finance? It's because the return is big. That's the only thing. If you are an investor and your dollar can make perhaps 16% per year, then it's a very solid place to invest, because the traditional systems will give you at max 12%, and in developed countries, they give you at max 6%. 6% is even big. But you get the point. Decentralized finance, since it's a decentralized manner, anyone can access it, the services are good, people are willing to use those services, and you can get very good returns. And Inkryptus now saw that many people are missing out on that, and they decided to create a platform where anyone without the technical expertise can do it. Is that clear? Please go to your box set. If that point that I've stated about Inkryptus is clear, go to your box chat and type 777. If that is clear. Because if that is clear, my job here is done. If you understand why Inkryptus is here, my job is done. My job is done. Okay, we have Victor. Okay, Julie, I'm going to repeat that for your sake. When we are building financial systems, you know how your bank works, how these hedge funds work, everything how it works. But instead of putting them in the traditional systems that we have, but you decide to deploy that whole project in the blockchain, meaning that it's borderless, anyone can access it. It uses smart contracts. It's very simple. It's very straightforward, fast, it's efficient. Then that category is called decentralized finance. It's an application of blockchain that's called decentralized finance. Now, in order for you to access those services, it's technically difficult. Because as I said, I personally lost money. So when I tell you it's technically difficult and one single mess up can see you losing all of your funds, that's the disadvantage or the hard part about DeFi. Now, Inkryptus, seeing that problem exists, that normal people cannot access those services, they decided to create a platform which is secure, it's transparent, it's community-owned, so that people can access those services without the risk exposure. So Inkryptus does not take your risk. No, Inkryptus creates a secure bridge for you to reach those services. So the problem is there, the solution is there. And once you understand that, then everything about Inkryptus will always make sense for you. Inkryptus wants people to access these services. Now, it took them a while. I don't know why, but I know they're smarter than me. But they decided to introduce their coin called Ink 2 years back, something like that, 2022, I think, because it's the year I graduated. No, 2022 or 2023. I'm not that certain. This is 2025, right? Yeah, it's 2022 because back then we were launching Diena Academy. So they introduced their coin. So this now gives you ownership of the project. It gives you access to the services that are within the project. And what most people like about the coin is that with Ink token, you can do one of this DeFi service called staking. Staking in simple terms is crypto fixed deposits. So DeFi is it's just crypto fixed deposits, meaning that you buy crypto, you lock it for a while, and you get rewarded for locking it. Now, it's very important for one thing, to understand where the profits are coming from. Another very important point, profits come from new coins coming into circulation and transaction fees. Okay? So I'm going to speak here because it's very important for you to understand here, because this is where the money is. And I'm going to speak with examples. Okay? I'm going to speak with examples. When you're doing staking, and we are saying that you're getting new coins that are coming into circulation, then what we mean is, for example, for the case of Inkryptus, okay, we have Ink. Okay, the maximum supply, this is now tokenomics, right? The maximum supply is 200 million Ink. That's the maximum supply. It's usually, that's how it is for crypto projects. So someone sits down and say, this project is only going to have a circulating supply, maximum of 200 million coins. Those are the coins that are going to be running within the ecosystem. Now, for development and let's say company, to run the project, hey, why is it not coming? Project, huh? To run the project, an amount of 10 million ink was set aside. And from there, what had to go to the public is what? Is 190 million ink. Now, Inkryptus, as I said earlier, it had these services. Back then, when Inkryptus started, we could do staking, we could do yield farming. And what you can learn is that when you stake, you can receive new coins that are coming into circulation. Now, at the beginning of the project is that these 190 coins were not in circulation. They were not in circulation. So they chose staking as a way of bringing those coins into circulation. Okay? I'm going to give you a real-world explanation so that we go together. I have started my company today, charities company. And I have, let's say, I say, in this company, I am going to have 1 million shares, okay? And I give myself maybe 100,000 shares. How many are going to be left? 900, right? So if I start my company, okay, casting maybe, this is my company, okay? So we have 1 million shares. And charity, I get how many? 100K. These are for me. I'm the owner. And maybe some funders, I give them how much? Let's say 550K, right? Now, I tell my employees that we are not making profit yet. I cannot pay you in cash, but I will give you shares. So I'll tell you that every month, for example, we have Judith. Judy, I will pay you maybe 10 shares. You get 10 shares. Eh? Maybe who? Jason. Jason, you get perhaps 7 shares. I give them, instead of giving you cash, I'm giving you what? Shares. So if my company goes public one day, you have the ability to sell those shares. And even if it's already public, I still have the option of paying you in shares. So instead of giving you cash, I'm giving you shares. Now, the same thing is what is happening here. So the company is distributing new coins to the investors of Inkryptus, meaning that stakers, first of all, is that new coins are given to loyal customers. Because if all new coins that are coming in, I give them to people who have done staking, it means that I'm giving back to my loyal customers. So it means that for us who have trusted the project, we have an opportunity of being paid because we trust the project. But we are not paid in USDT. We are paid in what? We are paid in the tokens that we have staked, which is Inky, the Ink token. So the company decided for good supply dynamics is that only per day, a maximum of 10,000 ink is minted and distributed. So every single day, 10,000 ink, let me not write slang. Let me put the whole numbers here. 10,000 ink is minted and distributed, given out to the loyal customers. Now, where can these loyal customers get? Inkryptus has given you an option of how you stake. You can stake for 36 months. You can stake for 24 months. You can stake for 12 months. You can stake for 6 months. And you can stake the free contract. The free contract. So depending on how much you have invested, it tells you how much you can get. How much you can get. Now people will be asking you like Charity, how do I know how much can I make when I do an investment? Let me show you something here. Okay, share. I hope you can see the screen I'm sharing right now. If you can see the screen, please type 888 if you can see the screen. If you can see my screen, please type 888 so that we can move further because Okay. Now, if you go to www.inkryptus.com, and here you can go to solution staking solution. That's a bit clear, you know. And when you go to staking, you scroll down, you will see here we have a calculator. So it tells you how much am I going to invest. For example, it's straight mathematics. It's a simulation. It uses today's percent to calculate your entire future. We know that nothing is constant, right? But let's just assume everything is perfect. So if you invest, let's say $5,000, okay, for today's standards, you'll get 3,100 ink. And if you stake them in the 36 months, within a year, you'll have a profit of 236 ink. And after 1 year, the staked amount plus the profit you make, this is better if I did this. The staking amount and the profit you make will be this amount. So you can actually use this tool and see how much can I make if I invest $5,000. If I invest $200, you have that option also. Maybe I have $200 right now. I want to invest for the whole 3 years, maybe. I will have made a total profit of 284 ink, and I'll have a total amount of this. So you can do that. That's very straightforward. I wanted you to show you this calculator. You can use it at your own time. Use it at your own time and see how these things are working. Now, one final thing before I end and welcome questions. Sorry for that. Hey, where were we? And I hope I can get back to the whiteboard. Continue. The one. No, it's not. It's not the one. Just a moment. Let me just share the whiteboard out. Let me share the whiteboard again. There's one thing that you have to remember is that in this business, there's one challenge in this business. There is one challenge in this business. Clear everything. Challenge. And that challenge is price fluctuations. Meaning that the value of the tokens that we're investing in, they change. 1.5, 1.49, 1.61, 1.2, they change, they are not stagnant. So you cannot say like, I've invested $1 million, I have $1 million. No, you bought ink worth $1 million. So the same ink can be 990 something or 1 point something million. The token, the asset that we bought. If today we go to invest in land, you bought maybe, you spent 1 million to buy 1 acre in Kiambu. If someone asks you, you can't say I have 1 million in Kiambu. No, you say I have 1 acre in Kiambu. You buy a house. You can't say I have 50 million in Dar es Salaam. No, you say I have a house in Dar es Salaam. It might be worth 50 million. It might be worth more or less, depending on the market price. The same for the assets that we have. The same. You buy an asset, it changes in value every single second. What? Because people are buying and selling, buying and selling. When we have more buyers, the price goes up. When we have more sellers, the price goes down. But since we are investing in assets that have good projects, we know in long-term projections, eventually we are going to be on the net positive side. Because any currency that you see today, any cryptocurrency that you see today, whether it be Bitcoin, whether it be Ethereum, whether it be BNB, one day it was less than $1. That's how it was back then. So in the long run, we know that eventually we are going to make money, but it's going to take time. Now, another thing that so many people will oversee, and it usually comes a lot as a question, I want you to start writing your questions on the chat so that we can go through them together as I'm explaining the last point. So please write your questions on the chat. Is that I have said per day, only 10,000 ink is coming in. Jesus Christ. Is coming in. Only 10,000 ink is coming in. What does that mean? It means that if more people are staking, and we are still getting the same amount, it means the portion of the ink that you are receiving per day will be decreasing, will be reducing. Not because the amount of ink that is coming in per day is decreasing, no, but because the number of people who are investing in the project are increasing and they have locked their asset. And since the primary source of the rewards that we get is new coins coming into circulation, if that supply remains constant, then we are going to be scrambling for the same supply, and the amount of coins we get in per day will be decreasing. That is a very positive aspect, although people will see it as a negative aspect, like my profits are diminishing. No, it means that more people are adapting into the project, which means a bigger community. And since now that community is coming in and staking, it means that in the long run, we are going to enjoy the profits. In the long run, we are going to enjoy good price stability, because if you have a coin which more than 90% of its circulating supply is locked, you are in a very good position to have very constant prices. Because for a project like Inkryptus, which is very young, to have such stability, like I know I'm going to buy ink, it might be maybe 1.6. You are certain of a range where you're going to find ink. It's something which is very strong. So the decrease in the percentages that we get should be something that should remind you that more people are seeing the potential that you saw in the project. More people are coming in, which means eventually in the long run, the benefits are going to be maximized. Okay, Diana Kajagi, how do I get profits from transaction fees? That's a very good question. And the only simple way to answer that question is, like, there are specific protocols that allow you to earn transactional fees. It's not every staking you earn transaction fees. No, there are specific protocols that allow you to earn transactional fees. And how it works is that anyone who does a transaction, they are charged a transaction fees. And if now you have staked in that specific pool that is there for proof of stake, then that percentage of profit is usually accumulated and divided equally. Meaning that, explaining it in simple terms is that when you do staking in order to accumulate the transactional fees, is that you are buying, you are staking your coins in a protocol or in a system that validates transactions. So you locking is like a collateral for that validator to be allowed to do validation. Like you need a specific capital. For example, for BNB, it's for the Binance Smart Chain is 10,000 BNB. So you need 10,000 BNB to be allowed to verify transactions. So if you don't have 10,000 BNB, then people can give you their BNBs. Then you'll do the validation of transactions. And from whatever you get, then you split the profit. That's how it works. That's how it works. Is there any other question to that point? So I will attach my number to the box chat. And if you have any question, please, you can take your number, you can text me, and I'll gladly get back to your question. I hope that there is no question to that point. I hope that everything was clear to anyone. So I would like to thank you all for your time. Thank you all for your patience. And hopefully we are going to meet on the next recording. Hopefully we are going to be on the next recording, and we are going to have a very powerful session, a very empowering session. So I would like to take this Mac bike to my brother, Umoja Exchange.